All right, good afternoon, everyone, and welcome to our webinar Financial Force, brought to you by North Star Strategic Partners. Before we jump in, let me quickly introduce who North Star is. So, at North Star, we're a team of business strategists who focus on one core mission: helping businesses increase profits and operate smarter. We ask the questions that don't always get asked, and we dig into the areas that aren't always obvious but are often the most important. Over the years, we've helped our customers grow, thrive, and build stronger, more sustainable businesses. And we're excited to share some of those insights with you today. Alrighty. So our speaker for today is none other than Wendy Roberts. Wendy is all about building winning strategies and helping customers make the most of their resources and profits. With a background as both a corporate finance executive and a startup CFO, she brings a ton of insight when it comes to helping businesses grow and succeed financially. She has a degree in accounting from Indiana University, has taken MBA courses at the University of Tampa, and has spent years guiding business owners through the ins and outs of financial strategy and profitability. She is also a published author. Originally from the Midwest, Wendy was raised in a working class family, and one of her favorite weekend hobbies is cycling around the Bay Area. She rarely misses a ride. So before we dive in, just a couple of quick reminders. If you have any questions, feel free to drop them in the chat. We'll go through them at the end of the webinar. And yes, a recording will be sent to your email after this session. With that, let's hear it from Wendy.
Thank you, Shai, and thank you to everyone who is joining us today on our workshop. We hope that you get a little bit of nuggets out of this to help you run your business a little better. As Shai mentioned, I'm a startup CFO. I love doing what I do. That is my why, to help business owners achieve profitability and scalability. And one of my stints as a CFO, we actually had an exit strategy with a public company. Also, as she mentioned, I published a book called The Only Business Compass You Will Ever Need. Many of the things I'm talking about today are in that book, and it's available on Amazon. And I always love talking to aspiring entrepreneurs and business owners. I always will give you 30 minutes of my time so we can talk and learn more about each other and see if I can help you. So today, what we're going to talk about is, first, I want to give you an overview of the 4 points of focus. This is our coaching and consulting methodology to help create more sustainable business growth, which then leads to more profits, which leads then more to you being able to scale your business or position it for an ultimate sale or acquisition. Then we're going to talk about practical strategies and some tools. And then at the end, we'll talk about Q&A, questions and answers, things that you might want to learn about or that you want to just ask me. So today we're going to talk about fueling our business success through financial strategy. This is our second part of a two-part series. We covered the first part last month, and it's available on YouTube if you want to listen to it. So each of the areas in which we're going to be covering, financial strategy is very important. Yes, I'm an accountant, okay? But I do want you to understand, even as a business owner, you need to understand the fundamentals of what your financial statements, what your QuickBooks are all actually telling you. And we'll get into that in just a minute. But what I wanted to give you is an overview of the 4 points of focus. So the 4 points represents the four elements or 4 points on a compass. So you see the compass here on the right-hand side. That is actually the front cover of our book. The whole purpose of North Star Strategic Partners, one being the North Star, using your compass to find your Polaris or your North Star. The second, strategic, applying our 4 points of focus methodology to your business. And partner with an S, is that we partner on that journey with you. You're not alone. And we all know running a business, it can feel very much alone. And so we want to help you get through that process, through the ebbs and flows, the ups and downs that happens. And when we own a business. So the 4 points, which mimic the 4 points of a compass, the first one is red for marketing strategies. It's the targeting of your customer. How do you know who that customer is? How do you talk to that customer? And what is your return on your investment? In other words, your marketing dollars, which ones are paying off and which ones are not? Now, this is very strategic. It's not about designing a website, it's not about SEO. We work with professionals that do that, but this is very strategic. Your mission statement, your value proposition, how you talk to that customer. That's the red for a bullseye. The second is what we're going to be talking about today is financial structure and growth. That's the green in our logo, which means money, profits. So how do I generate more cash? Because cash is king in order to be able to have more profits in my bottom line, which is our net profit, which translates more to your pocket. Then the third element is the orange in our logo, or our compass, if you will, and that is operational excellence. So if you could have one word that would describe operational excellence, it's the word optimize. Optimizing your processes, what we call standard operating procedures, optimizing your automated systems, your tools, those things that you use in your business to be able to work with your business. And then the final of our 4 points is the blue for trust. Trusting in your people is the people and team building aspects of our methodology. Without that, you really don't have a company. If you can't trust in your team and your team is not 150% focused on your mission and what you're trying to accomplish, you're not running at the optimized areas. And again, you can see how all of these kind of flow in together. The people flows into the optimization, the financials flows into the optimization, marketing all flows together. So it's a holistic approach to be able to build a company. Now, let's get into the second point, which is the money part, the profitability, the green in our logo or in our compass. So, when we look at numbers, and I know numbers can be kind of scary sometimes for people, and that's okay. It's okay. We don't want to make you an accountant. That's what I do, right? But we don't want you to be an accountant. I help you as a CFO. Think of me as your fractional CFO that has your back. That is my role to help you be able to achieve the results that you want to achieve. So, turning numbers into your narrative, when you think about the income statement, the balance sheet, and the cash flow statement, what should come to mind is that all three of those together tell a story about your business. It can tell you what's past, what's current, and what potential you have in the future. That story can be very revealing to you. And so we want to understand what that story says about you and your company, and then formulate a plan to be able to have it more, your company, more profitable and scalable. So financial statements do tell a story about your business. Now let's first talk about the income statement, or better known as the profit and loss. So the income statement really summarizes your company's revenue, your expenses, and your profit over a period of time. So it looks at the current month, it might look at prior months, so that we know where you have been. And what we do is we produce a lot of dashboards for our customers that shows them year over year or month over month how they're doing and how they have compared themselves in 2025, let's say to 2024 and 2023. Those trends, as we call them, will be very revealing. Again, your financial statements tell the story about your business. When you see it graphically, and not just numbers, but graphically, it puts a light bulb, I think, in many people's minds to say, oh, yes, I'm doing great, or no, I could do better. So we help you create those dashboards and present a plan so that we can then move forward to get you more profit. And we'll talk about what that profit looks like. So there's the gross profit margin, which we'll talk about in just a little bit. The gross profit margin tells me how well you manage your materials. Let's say you're a construction company and you have materials that you have to buy. You're building a house, you have materials, and then you have subcontractors. So it tells me how well you are managing those expenses to what you're actually taking in. So when you really think about it, your gross profit is really the real revenue or what's left over for you to be able to run your own business, such as the marketing expenses, paying your staff, let's say for indirect, like office staff, paying yourself, paying your insurance, all of that is below the gross profit. And so the gross profit really tells you what you have left over after addressing the materials and paying your subcontractors so that you can run your business in a very meaningful way. So knowing the gross profit margin is super important and knowing your gross profit. The next area on this income statement is the net profit or net profit margin. The net profit tells you and tells me how well you're managing your cash after you have paid all your expenses. What do you have left over? And that may be left over to invest in the company, pay your income taxes, pay your state taxes, whatever the case may be. But it tells me, and it should tell you, what's left over. Now, why is the gross profit margin and the net profit margin important? For one, if you're trying to get bank funding or any kind of funding for your business, it's very important to know these numbers because you're liable to be asked, what is your gross profit margin? What's your net profit margin? A banker is going to be looking at these ratios and deciding whether or not they want to give you a loan. So the higher those numbers, the higher the net profit margin, the higher the gross profit margin, the more likely you're going to be able to garner funding for your business so you can grow it. The second element is if at some point in time you want to sell your business, whether it be to a strategic partner, to an employee, to a third party, what the buyer is going to be looking at is what is your gross profit margin? What is your net profit margin? Because they want to know, can I get my money back over a period of time? What is my return on my investment, or known as ROI? Very important to understand those. And we'll give those in just a minute. I'll give you the formula in just a second. So let's talk about the balance sheet. Now, remember, there are three. There's the income statement or profit and loss, which what we just talked about tells me what your expenses are, what your income is, and what your net profit is over a period of time. Now we talk about the balance sheet. I'm going to give you the idea why a balance sheet is important, why you need to pay attention to that. But the balance sheet is really a snapshot of a period at a specific point in time. It's that snapshot. So it tells me what assets you own, such as your cash. You might have accounts receivable. You may carry inventory, what your fixed assets are, what the net value of those fixed assets, and then we come up to a total assets. It also tells me what you owe. Maybe it's accounts payable, maybe it's credit card debt, maybe it's loans, maybe it's shareholder loans. So the difference between what you actually have in assets or own versus who you owe, that difference is known as equity or net worth. So, a simple math here for the formula for a balance sheet is assets minus liabilities equal equity. So, it's the assets that I own, the liabilities I owe, so the assets minus the liabilities I owe, equal our equity, our net worth. Now, this is book value, our net worth in our business. Or stated another way, assets, what I own, equals the liabilities I owe plus my net worth or what's left over. So assets equal liabilities plus equity. So those two formulas really formulate the essence of the balance sheet. It's very simple. Now, why is it that the balance sheet is important? Why are these basics in the balance sheet important? And again, the assets are the resources you own, the liabilities are the debts you have, and what's left over is your equity or your net worth. So, why is that important? It's because, again, with bankers and buyers, so in the banking industry, they like to look at what's called a working capital ratio. So, the working capital ratio measures your liquidity. The bank wants to know how liquid you are because if they loan you money, they want to know that you can pay it back with interest. Don't forget, with any loan, there's always interest. It's not money that's invested into your business in terms of equity, it is loan. People expect to get paid back plus interest for the risk of giving you that money. That's the purpose of interest and why interest is charged on some loans that are much higher than other, let's say, bank loans to, let's say, unsecured debt or money that you might get out on the web. It's going to be higher priced on the web because they perceive there's higher risk than the bank. So there's differences in how you fund your business. My advice to you is seek out advice. If you want some information about lending and how it all works, reach out to me. I love to give the education. It's very important to know what type of debt you're getting because I don't want you caught off guard with this tremendous amount of interest rate that it takes you a long time to pay down that debt. So the banker wants to know the working capital ratio. So let me give you an example of the working capital ratio. It's very simple math here. So it's your total current assets divided by your total current liabilities. So let's say if you had $1,000 of total current assets. Now, total current assets are things like inventory, accounts receivable, and cash. So let's say you had $1,000 worth of cash and you divide that by your total current liabilities. Now, we're not talking long-term debt. We're talking credit card debt, short-term, accounts payable. Let's say you have $1,000 of total current liabilities. So the formula again is the total current assets divided by the total current liabilities. So in my example, let's use $1,000 of cash, total current assets divided by $1,000 of liabilities, total current liabilities equals 1. So that's a ratio of 1 to 1, which means you have exactly $1,000 of assets to pay off your current debt. Now, if that number is less than 1, it tells me that you're not in a good place, that you have over borrowed or you have some problems with your cash flow, whatever the case may be, but you have a lot of work to do to get your company stabilized. If that ratio is 2 to 1, 3 to 1, 4 to 1, the bank is going to be super happy because it tells them you have 4 times as much current assets than you do current liabilities. So they know that you'll be able to pay off their debt with interest. And again, remember that interest is for the bank giving you the option to borrow from them, and that's their risk factor by charging you interest. So it's super important from a banking standpoint to recognize what your working capital ratio is. And you can go out to your QuickBooks or Zero, whatever accounting system you use, run your balance sheet and do that simple math. Current assets, total current assets divided by total current liabilities. Now, one other thing I want to mention too about the why the balance sheet and the working capital ratio is important is because a buyer wants to know how much they're going to get on their return on their investment. So the higher that working capital ratio, the more likely you're going to get a higher amount for your company than if it was closer to 1 to 1. Now, let's talk about the third, excuse me, which is the cash flow statement. It's a big word, I know, but basically it tells me what cash went into your business and what cash went out. It also tells me how well you're managing your cash. It's a key indicator. Many business owners do not pay attention to this cash flow statement. You have it available to you in your accounting system. Do run it and see what it says and see if your cash actually grew at the end of the month or did it decrease. So that will tell you whether or not you were actively helping to increase your cash balance or if you used it during that particular month. Now, there may be a reason why you did that. Maybe you went and acquired a new dump truck, in my example, for a construction company. That's okay because that dump truck is going to be garnering revenue down the road. But if you spent more money than you brought in that particular month, and it wasn't for purchases, let's say for an asset or whatever the case may be, then you really need to take a close look at where am I spending my cash? Because we all understand that cash is king. And without cash, you do not survive in a business for very long. So now I was talking to you about the income statement and the gross profit margin, the net profit margin, and real revenue, right? What is left over after you pay for your subcontractors and for your materials in my example of a construction company. So the gross profit margin really is super important because it tells you what's left over, as I mentioned earlier. So that math is very simple. It's the gross profit divided by your total revenue equals your gross profit margin. It's a percentage. So the higher that percentage, the better you are at managing your outside costs. And the more money you have to pay the rest of your expenses, including yourself. Now, the net profit margin that we talked about is the net profit divided by your total revenue. And that is also a percentage. So net profit divided by total revenue equals net profit margin. Why is this important? Because it tells me how much you have in profit. What's left over after you have paid all of your expenses? What's left over? If that's in single digits, you have a lot of work to do, especially if you are in construction or especially if you are in professional services. Restaurants, I'd like to see lower double digits, 10 to 15%. In the case of professional services, you should be at least 25% net profit margin or higher because you don't have inventory. You don't need to purchase materials. You're not like a construction company. For a construction company, you should have at least 20%, more ideally 25% net profit margin. So again, run your QuickBooks, run your profit and loss statement or your income statement, and do that simple math to see where you are on that spectrum. If you are in those single digits of your net profit margin, you need to seek help. You need to figure out how you can grow that bottom line. Because at the end of the day, that bottom line is what fuels your growth. Now, let's switch over and let's talk about some tools and some tips. that can I hope that you can take away today and create success in your business, because it's my ultimate goal, my ultimate why is to help you in some way be better at your business in terms of profitability and scalability. So let's talk about a financial plan. So there's a couple of different elements here, right? The first one is creating a budget. I suggest that you create a budget, even perhaps creating a marketing budget. If you read my book, I talk about different types of budgets. And it's important for you to know how much you're spending in marketing. Create a marketing budget. If you don't know how much you're spending on marketing, you really should, because that is one expense that can get really very expensive and can go awry very quickly, especially if you are doing Google ads or Facebook ads. It can add up very, very quickly. So, developing a marketing budget that can flow into your overall financial budget is very, very important. So, you can have an overall budget, then you'd have subunits like a marketing budget, an operational budget, etc., an HR budget. Each one of these would flow up to your overall budget. Another thing that I would suggest that you do, if you haven't already done this, is seek out a financial planner or a financial advisor, someone that can help you do your personal investing into stocks or etc. You can also create a 401k for your company and for your employees. There's some advantages to do that to help you in tax savings, both on the business level as well as it's an incentive for you to retain employees. So, seeking out a financial advisor can help you. If you haven't already done so, think about estate planning. Estate planning is very important because if something happens to you, your family is going to be taken care of. I call this succession planning, contingency planning, but having an estate planning option for you is very important. And if you need referrals for financial advisors or for estate planners, let me know. I'll be more than happy to give you some referrals. Next is tracking your cash flow, making sure you have a successful cash management system. And this can be done. You could take your budget and create a 12-month rolling forecast. Another way is to make sure that you know where your money is going, what's coming in at a particular, say, by the week or by the month. I like to use it by the week. What's coming in, what money's flowing out. Then that way you can plan out, let's say for the next 3 months, what might be happening. It's a great way for you to manage cash flow. And again, cash flow is king. We want to have more cash. Again, for that working capital ratio. So the better the working capital ratio, the more attractive you're going to be to funding and to an ultimate buyer. And then the last is to minimize your overhead cost. When we even out our expenses and our revenue continues to grow, you're going to see higher net profit, because the better you are at managing your expenses over a period of time, the more profitable you're going to be. And when you manage those profits, you will see, I'm sorry, when you manage those expenses, you will see that your profits will be able to absorb and create more money for you in your pocket, and you will have a much higher cash balance on your balance sheet. Now, some other tools that I wanted to talk to you about. Invest in your growth, as we were talking about, as the net profit margin increases. If you want to scale your business, you have to invest in that business. It helps you better manage your customers if you look at tools such as a CRM or different tools that can be available to you. The better you have those systems talking to each other, as I mentioned in our operational excellence point, right? The third of our 4 points of focus, the more productive and the more cash you're going to be able to generate to the bottom line and into your bank account. So the more they talk to each other, the more optimized you're going to be. This directly affects your cash and how you manage your business. Marketing pillar that we talked about, the first point, also is measured by financial. So the more you have tools to be able to manage your marketing and your sales process, like a CRM, the more you're going to be able to manage your customers and keep happy customers. The next one is prepare for unexpected expenses. And this happens. If you've been in business for long enough, you know that there are ebbs and flows. You need to plan for the ebbs and the flows. It will happen. Nobody could predict what happened with COVID. Nobody saw that coming. But the ones that prepared for the rainy day are the ones that actually sustained themselves throughout that COVID period. So, having a rainy day fund, or what I like to call a celebration fund, putting money away that you don't touch and it's there for you. And over time, thinking about it like this too, as you create that celebration fund, it can be your cost free loan that you don't need to go to a banker and seek funding. You use that money to grow your business. As your company grows, you put that money back into that celebration fund for the next cycle. And when the ebbs and the flows do happen, or when the downtimes happens, you've got money already put away in your bank accounts that will help you get through that tough time. And next, get professional assistance. If you don't know what to do, or if you're stuck, or if you need help, ask for it. There's people out there that can help you, like us. We can help you get out of that stuck environment. We can help you build that profitability and that growth in your business that you're looking for. Here's some other tips for you. Pay yourself a salary. Doesn't matter if you are a partnership, a subchapter S corporation, a C corporation, an LLC, a single member. Of course, that would be Schedule C. But take money out of your company and pay yourself. You deserve it. You work too hard on a daily, weekly, monthly, yearly basis that you don't take a salary. That is a mistake. Take it. You're worth it. And you'll feel better about it. You'll get less burned out. And you will feel like you are accomplishing something because the company is able to pay you. Next, don't be afraid to borrow money. We've talked a lot through this workshop about borrowing money and what the bankers look at with the working capital ratio, your gross profit margin, and your net profit margin. So I will say to you, there's good money and there's bad money. There's good money called OPM. I'm sure all of you probably heard that, other people's money. OPM, or other people's money, used in the right way, which I consider good debt, helps you grow your company. There are going to be times that you're going to need loans in order to build your company. Maybe you want to create a new product. Maybe you want to create a new service for your company. Whatever the case may be, that short-term interim capital helps you build your company so that you can then produce more profits and pay back the bank with interest. So it can work to your advantage, but there's also bad money. So be very careful what type of loans you're getting because those interest rates could be super high in the high double digits that could be a cash drain for your company and not cash infusion. And then last, build good credit. Concentrate on your credit. Pay your bills on time. Make sure that you are monitoring your credit score because a good credit score will be very favorable when you do want to borrow that money. So paying attention to that is super important. All right, next steps. So as I mentioned earlier in our workshop, I wrote the book, The Only Business Compass You Ever Need. It talks about the 4 points of focus and then an end game. And it is about how to really manage a company in a holistic way. and why that's important and what the outcomes can be. So the book is about 150 pages, is very concise, but it really is a culmination of my experiences throughout my career. And I really started thinking about building this methodology back in 2017, right before I retired from corporate America in 2018. So I've been working on this philosophy, this methodology for all these years. We've perfected it with our customers. It works. It really garners you a lot more profitability and growth in your business. I'm very happy with what we've been able to produce with the book and our own methodology. If you feel that you would like to talk to me, I give a 30-minute free consult. Like I told you, I love to talk to aspiring entrepreneurs and business owners. If you have a problem, whatever the case may be, feel free to reach out to me. I always give a 30-minute consult that's free. And if you are really in a dire strait, you're like, I really need a solution, I need it now, then contact us. Be more than happy to tell you what packages we have and how we will be able to help you grow your business, which is very important. Again, you've worked too hard to create that business that you should be proud of. And if you're not, then we can help you achieve those goals that you're looking for. So again, our services is our 4 points of focus. It's our coaching, our premier coaching and advising solution. We also can help you create operating processes. If you don't know how to do those, we create flow charts and help you document what those processes should look like. We give you recommendations on how to improve them. We can help you customize that cash flow management system. If you don't know where to start, or even like don't have a clue, we can help you set up one so you can better manage that cash. Again, cash is king. If you don't have cash, you're not going to survive. We offer fractional on demand CFO services, like I mentioned to you. We also can create some key performance indicators, some KPIs for your staff and for yourself, what I call 90-day sprints and etc. So that's part of our program so that you will be able to better measure yourself and your team and make sure that you are accomplishing your mission and your vision. And then lastly, if you're curious about, what your company is worth, if you're thinking about selling, we use a system that is based on SBA data. It's very reliable data. And we can tell you what we think your company may be worth, as well as we can use your company against market comparables. Just like you would do a house, we can do that. So with that, I want to thank you. I know that your time is very valuable. If you want to reach out to me, here is the information. I want to thank you for being with us on this workshop. It is my hope that you have found some nuggets here that you can help you run your business better. And if you're not sure, or if you are if you need help, reach out to us. We're more than happy to help you. With that, we thank you and we hope you have a very, very wonderful day.
Do we have few more minutes to answer questions, Wendy?
Sure. Yeah, just a couple. I think I want to keep everybody to about, well, we're at 40 minutes. I want to keep everybody to about 45 minutes or less.
Okay, so a couple of interesting questions came in today. So the first one is, how do I build a financial plan if my cash flow is unpredictable?
Ah, it's the unpredictable part that is key. So remember when I said that your financial statements tell a story, especially your income statement? That is the starting point of how we build a cash flow management system for you. So very important. From that, then we start looking at your business operations. From your business operations, then we prepare that cash flow management system. So again, we can monitor it on a weekly or monthly basis to know how you're doing. And then we can take steps or we can make adjustments as necessary. But that's the starting point, is that income statement. And from there, then we start building that cash flow management system.
Thank you. Another one is this: what's the first thing North Star looks at when helping a new customer?
Great question. I'm going to go back to what I said before, your financial statements. Your financial statements tell the story about your business. Remember earlier I said to you, it tells me where you've been, it tells me where you are today, and it also tells me what future you have, what potential you have. And by knowing that, then we can easily guide you through the process of having how to build a more profitable, sustainable business. But the key really is understanding those financial statements and the story that they're telling.
Perfect. And one last question. I have a business, and I feel like it is profitable in paper, but I don't feel it in my bank account. What should I look at first?
Ah, again, expenses. How well are you managing your expenses? So again, I'm going to go right back to that income statement, that profit and loss. That's the starting point for me. And we start analyzing what cash is coming in, what revenue is coming in, and where is it going? And we more than likely, we're going to be able to find some areas where we can be trimming. In fact, I bet all of you on this workshop, if you go back to your credit card statement or your bank statement, you can probably find at least one expense that is automatically deducted as a subscription of some sort of monthly deduction that you don't use anymore. I will put a $20 bill on it, maybe even a $100 bill, that everybody on this call can say that they have at least one. So starting with those expenses, start streaming, figuring out where they're going. Where's your money going? Then we can start working on building up your cash flow. And then we can start looking at your top line. Maybe we can diversify your products. Maybe we can diversify your services. We need to understand what that looks like. And from there, back to the holistic approach. Who's your targeted customer? From the marketing strategies, is your marketing strategies working? Are they are they creating the return on the investment that you are expecting? Maybe you're not spending the money in the right place. Maybe your employees are costing you too much money. So then that's the fourth point. The blue, the trust, right? Do your employees, are they costing you money or making you money? Are your systems, what's the orange? Are your systems optimized so that you are garnering the highest capacity that you can from your automated systems and your processes? So it all comes back to the same holistic approach. Looking at your finances tells me everything I need to know about your company. And from there, I can start building a plan to help you build more achievable goals for each of those 4 points of focus: marketing strategies, financial structure and growth, operational excellence, and people and team building. Again, it's a holistic approach. And it's for me, it starts with the financials. I hope I was able to answer that question.
Awesome. Thank you so much. Those are our questions for today.
Awesome. Thank you. All right, everyone. Thank you. We so appreciate your time. I tried to keep it to around 45 minutes. So we'll give you some time back into your day. Thank you so much. We appreciate you, and we look forward to seeing you our next workshop. Thank you. All right.